Profit pages. Empowering entrepreneurs with profitable pages. Have you ever wondered how to make sense of the complex and ever-changing world of investing? Or, are you a budding investor who is trying to make better decisions? Or, are you facing the tumultuous tides of the stock market, a realm where fortunes shift with every tick of the clock? But here's the twist: the author of the book says, even a blindfolded monkey throwing darts at stock listings can outperform their professionals and even can outperform in various markets. And most of all, these behaves like a random wall down. This might seem to be controversial. Yes, of course it is. But, embracing the principles of a random walk down Wall Street actually be your compass in this sea of uncertainty? Make sure you watch the video till the end to get clarified. Now, you might be wondering, what motivated Mr. Burton G. Malkiel to write this book? Well, Malkiel was a firm believer in efficient market theory, which states that markets are highly efficient and incorporate all available information. He aimed to debunk common investment myths and help individuals adopt a sound investment strategy that aligns with market realities. Through a random walk down Wall Street, Malkiel strives to empower investors with the knowledge they need to succeed in the long run. Let me tell you a tale of earnings expectations and the efficient market hypothesis. In the bustling city of Phoenicia, where tall skyscrapers touched the heavens and bustling traders darted through the streets, lived a young investor named Alex. Alex was a bright and ambitious individual who had dreams of becoming a Wall Street legend. Armed with determination and a deep fascination for the stock market, Alex was always seeking opportunities to outsmart the market and make a fortune. One day, news spread like wildfire that a prominent company in the city was about to release its quarterly earnings report. Rumors and speculations floated through the air as investors and analysts debated whether the company would exceed expectations or fall short. The stakes were high, and everyone was eager to seize an advantage. Alex was no exception. Armed with charts, graphs, and historical data, Alex spent countless hours poring over the company's past earnings trends. If he could just spot the pattern, he might be able to predict whether their earnings will be a hit or a miss. As the day of the earnings release drew closer, Alex's excitement and anxiety grew. The market was buzzing with energy, and traders like Alex eagerly awaited the news. The fateful day arrived, and company finally revealed its earnings report. The report revealed that the company's earnings were significantly better than expected. Immediately, a wave of excitement swept through the market. The company's stock price started to climb, and traders were jubilant. Alex, who had meticulously analyzed past earnings data, smiled in satisfaction. It seemed that the market was responding just as the historical trends suggested. However, what happened next surprised everyone. In a matter of minutes, the stock price stabilized at a level that reflected the new, improved earnings. The initial surge of excitement had passed, and the market had efficiently adjusted to the information. Alex realized that the stock price had reached a point where it accurately incorporated the new earnings data. The market seemed to react so quickly that it was almost as if everyone had known the news all along. As Alex pondered this turn of events, it became evident that the stock market's behavior aligned with the principles of the efficient market hypothesis. The hypothesis stated that all available information was quickly and accurately reflected in stock prices. In Phoenicia, this meant that even if someone like Alex tried to predict earnings outcomes based on historical data, the market's rapid reaction would make it challenging to consistently outperform the market. The tale of the company's earnings report became a vivid example of the efficient market hypothesis in action. Alex realized that the market's efficiency was not a foe to be defeated, but rather a force to be understood and navigated. The story served as a reminder that in the world of investing, understanding market behavior and adapting to new information were essential for success. And so, armed with newfound wisdom, Alex continued the journey in Phoenicia's fast-paced financial landscape, and always ready to learn from the ever-changing rhythm of the market. If you can understand the deeper meaning of this story, you can outstand and perform in the market. Don't worry, if you can't. To be precise, let me give you 5 principles that would change your life in the investing journey. The stock market is totally unpredictable, this be what being led to believe by the financial industry. Beating the market consistently is nearly impossible. Somehow performance in one cycle just underperform it in other cycle. Management fees are the silent killer that chips away at your portfolio. If you cannot beat the market, just buy the market. Invest your money in index funds. Diversify portfolio by investing in uncorrelated markets. Meaning, the rise or fall of one does not affect the other. Trying to time the market is a bit like chasing shadows. By the time you think you've caught one, it's moved on. Burton G. Malkiel. So make wise decisions and grow to the heights that cannot be reached by others. If you found this video helpful, make sure you like the video, and subscribe to our channel, and ring the notification bell to get instant updates. Stay inspired and keep growing. See you on the next profitable page.